Welcome back, guys. Good evening. How was today? And I hope it was nice for you. Because my day today was very special, very good. But just stressful with academic activities and all that. But aside that, everything goes well, and I thank God for for His intimate mercy and everything. So for my Muslim brothers and sisters that are going through this content, if you are a Muslim, sorry to say, I wish you happy Ramadan and I wish you a successful beginning and the end, successful ending. Please do pray for yourself and pray for me as well. So, and if you are not a Muslim, also you have opportunity to pray. So let's whatever we do, let's put God first. Because he is the ultimate. Above all, he is the ultimate. I think if I would say this is the first time I would talk about something like this, maybe about God or something like that, well, I think it's very important because we all need it very much important. We really don't have much to say about today, but I think it is very important that we reference on things like majorly on the daily, because the intraday price action is not something that has much things to talk about. But the daily, I think we have a lot to focus more on the daily contract. Reason be that the daily contract right now is showing us what we really need to see because we are using a daily PDRA. So if you are focusing more on a daily PDRA, you need to also position your mind to see things on a daily perspective. Like if what we are looking for, let's say all this is a 4 hour bullish order block. So we will be, be more interested on the 4 hourly order in price action. So not wasting our time, let me dive into what we have. The Euro US dollar daily contract for Tuesday 19 March 2024 delivered lower into the consequent recruitment of the daily bullish order block as projected from yesterday. Now, what I'm trying to say is that as we have been talking, I have been referencing to this area. If you keep watching my videos from Monday, last week Monday, I think it's not this week that we are in, last upper week Monday. If you been watching my videos, I've been referencing majorly on this price on this area in time. Now let me introduce you to something. I'm just going to put this and I'll delete it. Look at where market closed today. Look at above, like we close barely, we close above that consecutive, consecutive. That is one, two, three. The consecutive down close candle, we close above it, or we close just that level, all right, we close above it. Now this is algorithmic, all right, this is why everything is algorithmic, and you need to see it with that perspective. Look how perfectly we close above it, and that is a major signs that this consecutive down close candle is being respected. Forget about the week. Sometimes before you reference onto the week, you need to focus more on the body, because when the body tells you much about this market, before you now reference what you see on the body of the candle into the week. Now this the body is telling you right now. That's why I say the daily contract is very much important. It's telling you right now that this consecutive down close candle is being respected, even though the market weak almost. But now this is where it gets critical. If it is not, if let's say if we wig below this consequent encroachment, that is another negative sign, or what people call red flag. That's a red flag for me. But I was referencing to this point, and I said we don't need to what price below this consequent encroachment if the fair value gap, sorry, if the order block is is effective. Now, according to Michael J. Hoodeston, he don't call this consequent encroachment. Rather, he referred to it as what mid threshold. I think that term has more meaning than me saying consequent encroachment. At least he only reference to this area to candle week as consequent encroachment, but on an other block like this, he referenced to it as what the mid threshold. All right, which is the mid threshold of the sorry the mid he refers to it as the mid threshold, meaning that the midpoint between the bullish and the midpoint, that is the distance between the high and the low of that candle. Now, I am very pleased to see euro price lower and did not purge the daily bullish candle consequent encroachment, just like I've explained, of the week now, and rally higher and also close above the daily plus bullish order block. I think I've just explained this, right? But let me just read it for you guys. And also close above the daily bullish order block, showing that the daily bullish order block will be effectively utilized as the support for the price move higher. Right? Yes. Then, with the current price delivery, Euro is showing willingness to price higher as today the daily candle shows a rejection candle, which I am anticipating to be the low of the week, and also be the swing low for the current price reversal. Now, what I'm trying to say is that if we are going to be bullish, or with everything showing us, if it is going to be really bullish, then we are not supposed to close below this candle low. So everything should be above this candle right currently. All right, everything. We are not supposed to close below this candle, and tomorrow candle should form a lower high, which is should not go below this low, and that will now make this today candle the swing low for this week. And we maybe Thursday could be the high of the week, or Friday, consequently, because of the current price delivery signature. Casting forward, I am anticipating forward euro to respect to the candle consequent encroachment of the week, and price should not pass through it. So my daily draw on liquidity is buy side liquidity, which is previous day high, this today candle high, and Tuesday Monday high. After Monday high, we have this high. So now, tomorrow, let's talk about, let's reference our idea on only tomorrow candle, since we are an intraday trader. Now, tomorrow we want to see price open during the New York Open, price lower. Maybe we can allow the week to get into this daily plus OB, but it should not pass this what CE, which is the candle week consequent encroachment. We should not week pass through it. So we should stay be above this consequent encroachment. But anything that, any things that make this price get lower should be rejected, and go higher. Then we have this high, and eventually we have this, which is another very good area, because it's a swing high. That is a swing high on a daily swing high. So it's a very good area to target for liquidity. So that's it for what I have on the daily uh market review for Euro US dollar. So let's go to the XY. Okay, this is the daily candle, the daily contract, sorry. This is the Euro US DXY, which is dollar index daily contract. And also, we can also see the price delivery for the dollar index in today market. And on the dollar index, we weak above the consequent encroachment, all right? And we did not go above this high, because I was looking for a smart money divergence, right? If we indeed go above this high, that would be a smart money divergence, even though we are going to go lower. But if that is in the price, and that's going to be effective, more effective, right? If we have that, but we did not have it. But that's not a bad thing to say. So, but with the price delivery for today, we see how it gets rejected, but also today price on the XY is looking, it's not looking like a rejection block if you compare it with the euro. So we're going to make sure to emphasize more on this the XY. And tomorrow we have Almighty FOMC coming out. So if you are putting a position on, be very careful. So don't because I have been saying that we don't want to see this, we don't want to see that. But these people can actually shake the table tomorrow, right? But still stay safe, don't over leverage, take a little risk, and let's hope for more, for God's willing. All right. So since we have all these criteria in price, then let's look at what price is giving us. So since we still close uh the candle above the candle, which is the bullish candle, the bearish candle on the SY, since we still close below it, it's still showing effectiveness. Then, if this is going to lead us lower, then we should see that in price tomorrow. And also, we have this fair value gap that was not used, and we have this volume imbalance that was used to push higher. Then we have this consecutive down close candle, like I've mentioned. And if we look at today candle, we have the consequent encroachment mark out. Then we're not supposed to see market wick above it. Majorly, we don't want to see them taking out this high. Alright, so we want to see that high remain open. So that's basically what I have for you guys on the SY, because we really don't have much on the SY, but more is on Euro US dollar. So this is the Euro US dollar 4 hourly contract. The Euro US dollar 4 hourly contract shows how price traded into the daily bullish order block, consequent encroachment of the week after it sweeps some of the sell side liquidity and equal lows slightly above the consequent encroachment. Now, this is what I'm referring to, even though I did not mark it out. Those relative equalos was swept. If you see there is a relative equalo that has been swept on this price, and we rally after taking that, and we price reverse back immediately. So sometimes it's very important that you take your attention into all these areas of liquidity, because they are very important, especially when price is getting close to them. Just like this area to east, we have relative equalos. If we all this that we are expecting did not play out, or that I've been saying it did not play out, then there is a high significance that they are coming for this relative equalos. But because of this weekly inversion fair value gap, I am not thinking that we are going to get here. So everything should still be on our side though, but we should also be conscious, and that's why we have to wait for confirmation. We can actually place a trade here and just wait for it to trigger and all that, but sometimes it is very important that you wait for confirmation. Now we have gotten the confirmation that we are going to go higher a little bit. Our confirmation, let me just say we are 60% confirmed. So we want to see how tomorrow traded. That means the morning session tomorrow. Then if you want to participate, you can now participate in the afternoon session. Then you can target this liquidity or this or this. But I'm not sure we are going to get here tomorrow. But apparently we could get to this area. So on the 4 hour, we can see that there is a price swing lower, and price begins to rally higher, showing an effective inversion fair value gap. Casting forward, since on the 4 hour, price has already tapped on the 78% region, which is a great discount buy. I am anticipating for price to not return into that consequent encroachment, and you should what begin delivering buy side or liquidity. What I'm trying to say is that since we have already get to towards this area, Now, euro should not have any reasons to go to go lower anymore, except we are coming below here. Except our analysis is wrong. That is when we have to see this area being pushed. Even though we have news tomorrow, even no matter how the news maybe can price below this, but I'm not expecting that news to wig out all this place and come back to it. But whatever happens, and anything can be the case. So that is it for the 4 hourly contract on the SY. So also this is the 4 hourly contract for Euro. Sorry, for the XY. Did I mention the XY on that other video? Sorry guys. Euro. That was for Euro. And if you are following up, you should know. Let me take this out. So um if you look clearly, there is a relative equal height here. See how we sweep it very clean. So all these things are very important if you have them in your chart. All right, because after this, we the next one we have here is this, but this look more cleaner to me, to anyone. I don't know about you, but I'm anticipating for tomorrow price to take us below this area. So if we price below here like this, then we are going to treat this as an inversion fair value gap, and that is going to lead us below here. So you still have enough time to be patient. Imagine you just be patient when we get up below here, then you can now say, okay, let me trust and put a position on. Then you can target somewhere here or here first, which is area of liquidity, or here area of liquidity, or here if you are a swing trader. But as an intraday trader, we are looking for tomorrow to be bearish on the XY. So we want to see that print out intraday, and you will not supposed to target more than this area, right? If it's going to give us a big range day, we are not supposed to get don't target more than this area. If you are targeting here, that means you are now turning your short time position into a long time position. So don't try to do that. So this is basically what we have for the XY on the 4 hourly contract. We can see all these areas of liquidity and have reference to them, and we just want to see how market is going to respect and react to those areas of liquidity. So that has brought us to the hourly contract, which is our last time frame. And we have only 2 minutes left. So the Euro US dollar hourly contract shows nicely the intraday price delivery for Thursday, 19 March 2024. The daily profile is an obvious 12 o'clock a.m. New York local time as the high of the day, that uh, at the high of the day, and also the opening price in New York, and uh, and euro rally lower. So meaning that this particular candle has is the high of today and is the New York opening price. As soon as that is formed, price rally lower from that price, and we did not get to. But if you very sensitive enough, you can still participate. I didn't participate on this market today, but because I don't want to sell short, but I see selling opportunity, because if you see, this particular candle that broke this line, which is the 1 o'clock a.m. candle, already create a swing low, right? Like a shift in market structure. And what happened? The next candle, which is 2 o'clock a.m., we price into this candle. That's that's what I look for every day. But I can barely see them clearly, like it's showing very plainly on the chart. But you need to practice in order for you to be able to see all these things. It's not after it has happened, but before it happens. Because for you to predict this thing before it happens, but after it happens, you can easily see it. But you need to master seeing it before it happens. So that is very, very important. But you just know what you have to see to expect something like this. All right. So the low of the day is formed at 5 o'clock a.m. New York local time. That price close to the daily bullish order block, consequently growing and reprice higher. So which is this candle that price almost close to that area of liquidity, the consequent and price higher. So now we are looking for higher prices, but it will be very sweet if we retrace a little before going. But sometimes they will not give you that opportunity. So thank you for watching, and if you find this insightful, please subscribe to this channel and follow us.